earlier this month, CBN released new capital requirements for banks. That is, the capitalization requirements, giving banks with international presence or license 500 billion naira, a national license 200 billion naira, and a regional license 50 billion naira. And for the merchants on national level, 50 billion naira. For the non-interest, that is Islamic finance, on national level, 20 billion naira, and for the regional, 10 billion naira. So our focus for today is CBN new capital requirements, implications for non-interest banks. Hello and welcome to Islamic Finance Weekly. I am Rahma Sayyid Muhammad. Joining me virtually on this discussion is Dr. Bashir Oshodi, the Chief Executive Officer, Trust Arthur. Assalamu alaikum. Welcome on the show, sir.
Thanks. Wa alaikum salam wa rahmatullahi wa barakatuh. Thanks, Rama.
Yeah, thank you for joining us.
A pleasure.
All right, so let's delve right into our discussion for today, which is circled around CBN recapitalization for banks. So, considering the prevailing macroeconomic conditions in Nigeria, was the first quarter of 2024 the right time to announce the new capital requirement for the banking sector?
I think what's more important than the timing is the timelines they've given to banks to recapitalize, which is 2 years. 24 months is a lot of time. It's convenient enough. Yeah, it looks like a lot of time, but in reality, it may not also be sufficient, but it's fine, it's fair. When I came in, whether the policy came in or the guidelines came in 2 years ago or last year or February this year, it doesn't really matter. But the fact that they've given banks 2 good years, to capitalize. And I've also asked them to send the formula, the plan, the roadmap, before the end of March, or by the end, or not before the end of March, right, this year. So it means that, by now, a lot of banks will say, oh, I'm going for Sukuk, I'm going for, I want to do right issue, I want to go for some, commercial paper and all of that, yeah. So I'll mix them up, so it's a good time. So the timeline they've given is fair. And I think the timing is also fine. Can you imagine if it came in maybe just before the elections, it's going to have other meanings.
Right.
So it's not that it's even coming at this time. So I think the timing is fine. It's expected. But more important, like I said, the fact that they've given banks a lot of time to get capital into their position is the more important thing for me. Yeah.
Right. Okay, the last time a recapitalization exercise was carried out for the banking sector was since 2005. The non-interest banks were not in existence at that time. So how will you describe the evolution of the non-interest banks in Nigeria since 2012?
Okay, so I think for me, I'm going to be looking at it from another angle entirely, right? I want to look at it from the angle of, I want to look at pre and post 2009. Pre and post, right? And that was because in 2009, Professor Soludo released the guideline in March 2009, the draft guideline for non-interest banks, right? So before that time, what was happening? Banks had relied on BOFIA and all of the other rules. They were not concrete enough. So you had at least one bank then, they tried to operate non-interest finance, right? I remember way back then, I tried to walk into their branches, and then every time I go to the branch, they'll be like, no, we don't know what you're talking about. That was the bank that started it, at that time. Relying on the fact that, in BOFIA, in some guidelines that come before, relying on the fact that, CBN had mentioned you can do profit and loss sharing banking, was insufficient to make a bank go into the market. The guidelines that did not even refer to the global non-interest banking standard. That would have been helpful. Maybe knowledge at that time was scanty. And so, so whatever bank they just thought, oh, let's collect money back of non-interest, so they collected money. So there was liability, there was no asset. The asset part refused to come, because they were not guided as such. Now in March 2009, yes, the first draft guideline was released. Yes, it was giving political colorings, that the government wanted at that time, right? But more importantly, it kickstarts the program of non-interest finance in Nigeria. And so 2 or 3 banks wanted to start. One bank wanted to be a window, the other bank wanted to get a full license. And it was in that 2009 that all the 2 banks started to make effort. In fact, 3 banks. There's another bank that wanted to do window, right? I decided not to mention names at this time. Yeah, so decided to push. It's the same year that EFINA, Enhancing Financial Innovation and Access, financed by DFID then, also then launched what we used to call the Islamic Finance Working Group, right? And that was launched, I think, in October. And that was in September 2009. It then became Non-Interest Finance Working Group. Again, the name was then changed a little bit so that Islam would not reflect there as such. Now, it's from that time, 2009, was when we realized that, even the guideline that was released was a draft. And, there was no expectation that a new guideline would be released immediately because, of course, there was a change in the leadership of the central bank, right? So the new central bank governor was concerned about, because of his own background in risk management. So they broke down banks into different categories. More importantly, we now have specialized banks at that time, and we gave room for non-interest banks. Now, that draft guideline that was released in 2009 was of no much effect. However, in, I think, January 2011, there was a new guideline that was released. And in that guideline, you had Sharia in so many places there. You had Sharia in there. But between 2009 and 2011, a lot of work went underground, right, trying to ensure that stakeholders were carried along under the Non-Interest Finance Working Group. We had the, if you like, expert group of people belonging to these institutions, the private sector, and of course, government, meeting regularly, monthly, to determine the future of Islamic finance or non-interest finance in Nigeria. Not just the banking sector, but capital market, takaful insurance, and even, in fact, sovereign bonds, if you like, sovereign sukuk now, right? All of those things were fashioned from towards the third quarter of 2009. And then the next thing to concentrate on was to spend more time and energy in coming up with the best guidelines ever. And so today, Nigeria is probably the most regulated market in terms of Islamic finance globally, right? So it means that even the GCC countries, and even European countries, they don't have as much regulation, in non-interest finance, Islamic finance, we do in Nigeria today. But that was a serious conscious effort. Conscious doesn't influence in any way. Conscious effort to ensure that you have guidelines with CBN, with SEC, with PENCOM, with NICOM, with NDIC. NDIC we have to do work on tax neutrality and all of these things to ensure that there's sovereign sukuk at a particular time of the period and all of that. And for the central bank, for example, it was beyond just one guideline. We needed to do guidelines on Sharia advice, on the Sharia committee and all of that, which is now called IS. So before then, so I was referring to the 2011 guideline, where you had a lot of Sharia in it. So there used to be Sharia Advisory Committee. You had Sharia about 26 places. I know there was a kind of, should I say, market, what do I call it? Agitation to say, hey, but why should you be doing Sharia in Nigeria? And so I think in June of the same year, it was then changed. The word Sharia was removed completely. They referred to our office standard, referred to our FSB standard, and made it. Yeah, so it was at that 2000. So by 2012, banks then started to get, in fact, the same 2011, by December, 2 banks got their license. And we standalone bank and a window. Again, the good thing was I was an integral part of all of this, so it was interesting. 2 banks got their license at the same time, November, December, thereabout, and they got started. So the start operations beginning of 2012, right? By 2013, a new bank came into the market, a window. Again, they started their operation back 2009 when they released the first guideline. But again, there was no headway. And then by 2013, that bank said, hey, we're going to get the license this year. And that year, they got the license. By December of 2013, they got the license. and it started with window operation, right? So that's why I was saying that it has to be from 2009 rather than 2012. So a lot of the effort in 2009, was what created the market, right? And of course,
Right.
right now you have at least four standalone banks, which is a good thing. One of
Yeah.
the windows is a full bank. One of the windows is still a window till now, and you have three
Right.
new banks, and of course they will recapitalize well enough. And so with the new recapitalization, it was easy to just absorb it, you know.
Yes. Thank you, sir, for that elaborate
Storyline.
explanation. Right. So putting all of this into cognizance, and especially the current Nigeria's economic realities into cognizance, what is your take on the new capital requirement for non-interest banks, which is 20 billion for national and 10 billion for regional licenses?
Yeah, so one of the things we learned under Islamic finance is that even where you have small capital, you can do equity, you can do debt, you can do agency, right? Try
Right.
to keep it simple, right? So you can do Mudaraba Musharaka, you can do under sale, you can do Jara, Istisna, Salam, Moraba, and Co. And under agency, you can do Wakala, right? Now, the Wakala bit can be off your balance sheet. The Mudaraba Musharaka, yes, has its own IFSB requirement, which has to do with provisions that you have to make from your capital to do a lot of Mudaraba Musharaka, including Wakala for that matter, right? Now, back to your question. Now, but at the same time, we have seen the growth in asset size of Islamic banks growing aggressively,
Right.
right, on the back of off-balance sheet items. But more importantly and more interestingly, on the back of Sukuk, especially the sovereign Sukuk, and state Sukuk, right? If you look at global Islamic finance performance, you see that the banks, the financial institutions, they're doing the best to capture the bulk of the market, so much of it,
Right.
over 60% of it. I can see the capital market taking just 20 something, 30% thereabout, and the other
Right.
financial institutions, try to manage the remaining bits, right? Now, in Nigeria, it's the other way around. So rather than the banks take the bulk of it, you can see the capital markets taking like the lead, Yes, as a result of the sovereign sukuk, just like as I mentioned in the beginning, conscious effort in 2009, consistent conscious effort. And so
Right.
by the time the first sukuk emerged, it was a result of 5-7 year work, back end, and then so you can see the sukuk market controlling 60-70% of the market, right, in Nigeria, right? And that's sovereign sukuk, of course, the first sukuk for sure, and then federal government sukuk. And you have a lot of private sukuk now, some listed, some not listed. But the size of the assets on the sukuk side is then much more bigger than what you have in the banks, all the banks put together, all the non-interest banks put together. On the other hand, issues around financial inclusion. When I finally did the research, you did research every 2 years. I don't know what's happening right now, but every 2 years we do research on financial inclusion, and you could see, increase, in number of people that are now financially included, right? Right.
Right.
Islamic finance was a major player in that space. So, it made people to now say, hey, I'm not going to keep my money, under my pillow anymore. I'm going to go to non-interest banks, right? And that's because the bulk of those were financially excluded from certain parts of the region of the country, or certain region of the country, that did not think conventional finance was good. I think is a bad
Right.
thing, and so on. You have financial inclusion, it's all financial inclusion as much as possible. They're looking at even inclusion of women into the financial structure, right? That's another
Right.
problem, right? So in Nigeria, not just in Nigeria, in even a lot of the OIC countries, right? You see a lot of women are still not doing business, they're not using the banks, for whatever reason. Now,
Right.
non-interest banks has encouraged women to come more into the banking space. You now have so many different, we have loads of programs for women and all of that.
Right.
Students, the youth, on the back of Islamic finance coupled with technology, you can then see a lot of, I mean, the amount may not be a lot, like having the big commercial banks, but you can then see a lot more people. You can create a digital app on your phone right now,
Right.
and then some kind of crowdfunding platform now, luckily, SEC has come up with guidelines on that, right? So I can control things, right? You can see a lot of people now using the financial system. You want to send money to somebody before, they will give you the names of the high street, the top high street bank, right? Now they give you all other names. You know what I mean? You want to buy food, you want to buy whatever, you go to a restaurant, you want to eat, they're giving you, be like, what kind of name is this? You know, now Islamic finance made serious impacts in that area, right? Even though, of course, with loads of other promotion around digital banking and all of that. So on the one hand, the capital market has helped, areas around financial inclusion have helped so much, right?
Yeah.
As we then see the Islamic finance have then started to grow organically, on the back of first limited capital. Now the capital has been increased, they're growing, but more importantly, they can throw things off balance sheets when necessary. If you like, you have an
Right.
asset on your books, you don't have issues around your ratios, you can quickly move those assets, into a
Right.
sukuk or a share paper, you know, and that then gives you space or headroom to create other assets to further. So on the one hand, the capital market is going to keep growing aggressively. The banks keep growing too, but the banks will then have to feed into the capital market as much as possible.
All right. Yeah, very well. Thank you. So, considering, the race for capital in both domestic and international markets, from your retrospect, what are the opportunities for non-interest banks to access funding options?
Yeah, one of the things that we discover with non-interest finance is the ability to get cheaper funding from abroad,
Right.
better conditions, right? They even find with greenfield, right? Um, and more importantly, the funds is then a function of how much you can absorb, right? So of course, there's loads of guidelines with regards how much foreign, borrowings that you
Right.
can take as a bank. You can't exceed more than 120% of your capital, right? So it means your
Right.
capital is so little, you can't take so much, and then by the time you add up your LC and everything, it is already part of foreign borrowings. You can't go beyond a certain limit, right? And so there's a need to
Right.
actually have this capital. We can then allow you to
Right.
have a lot more funds there and there. Yeah. So back to your question, the opportunity is amazing, right? So it means that now that non-interest banks are going to be having higher capital, again, on one hand, they can throw things into other instruments, but more interestingly, they can then do a lot more assets, right? A lot more assets can then come onto their books, and that allows them to then grow, if you like, a little more organically. Yeah.
Thank you for that. So back to our question. I've seen a lot of analysts and economists saying this will birth so many mergers, banks marrying each other, and coming into small or numbers would definitely drop. Do you think the 2-year window from 2024 to 2026 is sufficient for the non-interest banks, and will this spur the emergence of more players in this industry?
Okay, so let's just put it in context. Keep life very simple. We have four of them. Three of them right now have more or less met the minimum requirements, I must confess. So you don't have issues. And then
Right.
last one did the right issue sometime, to show up their capital. The other bank that is there just started, well, as a full-fledged bank, it's not going to take them time at all, to push in that capital. So that 2 year is more than enough. And just like I mentioned in the beginning, foreign capital always coming. Yes, greenfield can be
Right.
nice. Yes, can be problematic. But it's more interesting when you're already operational. You already have your staff,
Right.
you have your technology, you have your tanker partners, everything is in place, and you then just go and say, "Hey, guys, I need extra $10 million." That's gonna be, it's gonna be a lollipop in the mouth. You know what I'm saying? Yeah, so I
Yeah.
don't see problems there at all. And in fact, what we then envisage is that we're then going to see non-interest banks aggressively grow their capital,
Right.
beyond expectations, within the next 2 years. And because it
Yeah.
means that in another 2 years, there could be another recapitalization, right? So non-interest bank wants to be
Exactly.
able to absorb those hurdles or shocks when they come conveniently and
Right.
very easy. Yes, so
Yeah.
so then let's now talk about the new banks that have submitted applications already. For those that have submitted applications, yes, CBN has also given them the right to say, okay, you submitted application, but we're going to give you, maybe we've given you approval in principle or something. CBN is saying, don't worry, we're going to still give you the 2-year period. We'll still go on with your approval in principle. You can still carry on with your license if you have it, right? But however, we're going to give you 2 years to raise your capital. Now, you know the way it is, again, if you go to a PE company, any foreign entity, to say, hey, I have my approval in principle, I have a tiny office somewhere, my technology is already working, we've tested it, you will get capital for non-interest banks. But the monies we're talking about, and if you go to the Middle East, it's like nothing really. He doesn't want to take too much risk on greenfield sometimes, right? But yes, it's doable, right? And then the other option for them is to say, hey, why not take two capital in form of sukuk, right? Using Mudaraba Musharaka. Alternatively,
Right.
using perpetual sukuk, right? Use perpetual sukuk to raise a two capital. What do you do in that case? Just tell the foreign guy, you know what? Just underwrite this for me, or just guarantee this for me. On the back
Right.
of guarantees and any of these other instruments, the money may come, the money may not come, but on the back of it, if you issue a local sukuk, it's going to go a long way. Again, the next question is, CBN has defined what they want as capital, in the new capital requirement, to say, okay, what are they going to be using, accepting as capital? Can shareholders come in and say, hey, we want to inject more capital? Central bank will tell you, no, 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 it's not going to work that way, But yes,
Right.
fresh capital will be very good. They like that. Yes, managers and acquisition, but of course, I don't say there's no interest banks going to M&A at this time. Of course, the other option is to say, actually for the new guys coming in, new bank, not the new interest banks, maybe you want to be a national
Right.
bank, right? You're supposed to you're planning to raise 10 billion. Now suddenly it's 20 billion. You can just downgrade and say, you know what? I'm going to start with a regional license. And don't forget, the three non-interest banks that got their license first in the last 10 years or so, the first one, and then for the last 2 years, it started with regional licenses, right? Which is still not bad at all. It's a fantastic entry point. Immediately you come
Right.
in, liabilities start to come in. Yeah. So
Right.
at the end of the day, we will believe that there shouldn't be problems at all for non-interest banks in scaling up
Okay.
very quickly. Yeah.
All right. Thank you so much, Sal, for your time. That was really an insightful discussion. I'm glad we had this discussion.
Yeah. Thank you very much.
The question has always been, is the 2-year window enough for non-interest banks or Islamic banks? Well, Dr. Bashir Oshodi has handed it out for all of us. If you did not understand the thing, you better go back and watch and really understand, because that was a really elaborate explanation. Well, with that, I say, don't forget to keep it updated with us next week on the program. Follow us on all our social media platforms displayed on the screen. Thank you for watching. I am Rahma Say Muhammad.